So dollar cost averaging, a lot of people are talking about it. What is it? Why should you do dollar cost averaging? And does it make sense? Is this a good strategy, or is dollar cost averaging not so good and just plain stupid? What I want to show you in this video is some real life examples so that you see what dollar cost averaging is, how exactly it works, and whether you should be doing it or not. So let's get started. So let's talk about dollar cost averaging. What does it mean? It means that originally it comes, I believe, from the 90s where the stock market was just going up. And the idea here was something that the financial planners really promoted in the 90s is take some money every month and invest it in a stock. Use the exact same amount. That is the idea of dollar cost averaging. For example, $1,000. And every single month you're buying this particular stock that you're looking at for $1,000. And I want to show you an example of Apple right here. So here's what I did this morning. I went back over the past 17 months. So from January 1st, 2019. And I actually looked at the price of Apple in the beginning of the month. Yes, I did spend some time to show you some real life examples. So the idea here is that you would invest $1,000 a month buying Apple shares. Now, when a share costs $154.89, so this was the price of Apple on January 1st, 2019, you would buy 6 shares. 6 shares means that you would have invested $929.34. So here's next month on February 1st, Apple is slightly higher. As you can see, it is now trading at $166.96. So if now you want to invest $1,000, you can only afford to buy 5 shares because now you're investing $834. If you would buy 6 shares, you would invest more than $1,000. And the rules for the dollar cost averaging is that you have a maximum amount and you stay below. So you bought 6 shares for $154 and 5 shares for $166. This means that you now have 11 shares and the average price is $160. So you keep doing this every month and you see your average price changes. If you do this for 17 months, again, right now we are in May 2020, you would have accumulated a total of 69 shares. And over these 17 months, you would have invested around $15,000, to be exact, $14,998. So the idea here is that you invest a fixed amount every month. Now, let's take a look at an Apple chart really quick here and see what has happened since January 1st, 2019. Right here, I marked it in green. So as you can see, Apple has been consistently going up. Yes, it has been hit by this pandemic that we had and is now nicely going up. So what does this mean for your 69 shares that you would have accumulated over the past 17 months? Well, 69 shares and the current price right now of Apple is $317. So this means the current value of your 69 shares is $21,934, which means that you would have made a profit of around $7,000. So if you express this in percent, it would be a gain of 46% over this past 17 months or 33% per year. So based on this example, it seems that dollar cost averaging is a pretty good idea where you are investing a fixed amount regardless of what the price is. So the idea here is really to make trading or investing as easy as possible for everybody by not worrying about the stock price. That is the main concept of dollar cost averaging. But is it really a good idea? So I chose 2 more stocks to show you what happened if you chose a stock like, for example, IBM, right? I mean, IBM is a stock in the Dow. IBM, solid company. So why not investing in IBM? Because if you remember back in the days, didn't everybody say invest in IBM and also AT&T? So these are the 2 stocks that I want to look at right now. But is this making sense thus far, what I've shared with you? Because if it is, do me a favor and click on like. This way I know whether I'm going too fast or too slow. I want to make sure that these videos are really helpful for you. Okay, so here in the next example, we are looking at IBM. So IBM, the same deal. In January 1st, 2019, IBM was trading at $112.01. So we could buy 8 shares and invest a total of $896. And you see IBM's price fluctuate between $112 to $134, goes even up to $140. And you see we're following the exact same principle that we did with Apple where we are just buying shares for $1,000 always on the first of the month, regardless of the price. And therefore, we are adjusting the number of shares. So after a year, we would have accumulated 120 shares with an average price of $132. That is the idea of dollar cost averaging, right? That your average price for these 120 changes every month as you're buying more stocks. So we would have invested around $16,000, as you can see here. So $15,919. Now, as of today is May 21st, 2020, the current price of IBM is $120. So let's take a look at the charts before we come back to the results. So we're looking at IBM and we are doing the exact same strategy that we did with Apple. We start on January 1st, 2019, and every month we're investing a fixed amount. Now, as you can see, IBM has not been going up as nicely as Apple. And that is exactly the problem. Because if you look now at the dollar cost averaging, we see that over these past 17 months, we would have actually lost $1,500. That's a loss of 10% over 17 months or 7% a year. So what does this mean? Is dollar cost averaging a good idea or not? Now, before I answer that question, let's take a look at one more example. Because what everybody always said over the years, invest in AT&T. This is what grandma did, right? Didn't grandma invest in AT&T and hold the stock forever? So I thought, let's use this as an example, and we do the exact same thing here. Now, since AT&T is trading at a much lower price, we can afford to buy more shares. After the course of 17 months, we would have 405 shares. We would have invested around $16,800. And let's see what AT&T did over the past year and a half. So let's take a look at the chart, and it does look very similar to IBM. Actually, it does look a little bit better. AT&T was going up until the pandemic hit, and right now they still seem to be heard as of May 21st, which is today. So what does this mean for the dollar cost averaging? If we look at the current price of $29.64, the current value is almost $15,000. We did invest almost $17,000, so we are sitting at a loss of $1,842. This is 11% down over 17 months or 8% down over the past year. So what does this mean? Well, first of all, dollar cost averaging is a concept that comes from the 90s, and this is where the markets were just going up, up, up. Now, right now, we are coming out of the longest bull market in history. It has been for 11 years. So it should actually work like a charm. But as you see, the critical part, the absolute key, so that dollar cost averaging works, is to pick a stock like Apple that is constantly going up. And hey, can you be sure that you're picking the right stock? So I personally think that dollar cost averaging is kind of a stupid concept. It is super simple, but I believe if you put a little bit of effort in learning how to trade, that you can run circles around the market. Because even if you look back at our example of Apple, and we see that with Apple, we made 33% per year. The way how I personally trade, I only spend maybe 15 minutes a day to trade, and my goal is to make at least 60%. Recently, I traded an account and almost doubled it in 2 months. Right now, I'm trading another account where I'm planning to make at least 10% per month. So as you can see, with a little bit of effort, I believe that you can run circles around dollar cost averaging. Therefore, I highly recommend that you learn more about how to trade and don't fall for the simple kindergarten principle here of dollar cost averaging. Hey, by the way, if you would like to know how I trade, I've written the book, The Forex Strategy, and I'll be happy to send you a free copy of the book. It's 170 pages around, and all I ask is that you cover shipping and handling, which is $4.95. So if you want to do this, there's probably a link right below the video. Take advantage of this. Only until we have books. I do believe we have another 1,000 books, but they're going really, really quick. Trust me on this one. So anyhow, hope that helps. This is my take on dollar cost averaging, and now you have some real life examples, and you can judge whether this makes sense for you or not. I believe investing a few hours or maybe a few days or weeks in learning how to trade, you'll be much smarter and run circles around people that do dollar cost averaging. Hey, I hope that you find it helpful. If you did, there's probably a few videos popping up on the screen right now. Just click on any of the videos that you find helpful, and feel free to subscribe to the channel and share this video with anybody who might find this helpful.